Hello, everybody, and welcome to the Plus3 Futures and Commodities Show. My name is Ben Maldonado. As always, I'm here with Barry Hederachi on Friday afternoon, February 24th. Barry, can you believe it's February 24th already?
I mean, I believe it because we're here, but I can't really believe it,
We say it every week, but my God, that's almost 2 months down in
Well, a couple of more weeks,
2023.
we'll be in the middle of March, and then we'll be end of March, and that'll be
First
first
quarter will
quarter.
be done. All right. Anyway, a lot happened this week. And if you look at the charts and in my review, it looks like, things shifted. There was some shifting going on in commodity world, which I'll talk about. I'm sure you're going to see it in the big five. The only chart that I'm going to review, because the setup is great, and I highlighted it real time this week on Twitter, is Nat Gas. So we'll spend a little extra time on the Widowmaker. I'll show the 4 hour as well, and kind of, how we like to look at, Barry, how we like to look at the 4 hour for an entry or a shorter time frame and how it relates to the daily. And we'll go over that. I know you're going to cover ES, bonds, gold, copper, the dollar, the euro, crude oil. So you got a lot to cover. Let's start off with Bitcoin, because I think Bitcoin is interesting in its sort of metaphor for the rest of the markets, especially a lot of the commodity markets, what I've seen this week. So last week we were talking about this half square level, which was super, super important because it was going to tell us whether, we were going to push up and the rally was going to continue, or we were going to stall, congest, or even sort of pull back and correct. Well, the verdict is out. There was a multi-day battle. It looks like it spent almost 6-7 days here battling at this half square. The half square level, by the way, is around 24,400. All these levels are on a Google Doc spreadsheet, which when we send you the link for the new show, we'll send you the link for the spreadsheet as well. But this is the key level. Today, we got the first full bar under it. First full bar in a while, probably 10, 12 days. First full bar under it. So it looks like we're going to correct. The question now is going to be how far, how fast. But as long as we're below this half square and not able to get above it, the full square down here is your target and sort of the magnet for price, just under 20,000. So that looks like we're going to see what happens on this trend line. We should be testing this trend line in a couple days. But I fully expect, since we couldn't get above there, they're going to come back down here to test. What's your thought here on Bitcoin?
Well, I feel the same. I think it has a higher probability of kind of meandering at these levels, and probably check 20, or if not lower.
Yeah. The other thing that I wanted to say, because it's kind of important, from this spot here, which was the November low, to here, it's 90 degrees. So we did 90 days. The 90s are important cycle-wise, and it looks like the 90, after some hesitation, has turned it. So let's see how this sort of, after this cycle here, how it shapes up. And do we just go sideways? Do we actually, have a sharp pullback? We don't know yet, and we have to see. But the 90 is significant, and the 90 came in right about here, right near the highs.
Yeah.
So we'll see. Let me throw it over to you. I know you got a lot to cover, and I want to jump in on some of the things, because I was seeing some things in copper and some of the other markets you cover. Bonds has been acting real well for the short side. So let's get into it. Yep, couldn't hold that full square, huh?
No, not quite.
Yeah.
All right, let's take it from the top, I guess.
Right.
We left it off. I think we left off at just those 2 points, right?
Yeah.
The 40.38 area and the 41.40.
Those were our two markers. Yep.
Yeah, and we joked about the 100-point gaps and whatnot, but the main level was this, right about 40.52, which is the 60-degree mark. And we also put in this little ABCD possibly ending at this 4038.
Mm-hmm.
So the idea was, we can hold 4050, 4040, this area here that we might consolidate up above a little longer. And that if we took this out, then we're probably going to go lower and maybe test this 3916. Well, we as soon as we took that out, slip, one day retest, and then back down again, made new lows for the week on Friday. So, it was a weakness as we sort of expected. So now that, now we're below 60, the 60-degree mark. So I would say it's in more of a, let's just say, weaker position, right?
Sure.
And so we'll see how it goes. But for now, a couple of timing points came up, from the low, even though this is not the cycle low, I'm taking the price low.
Mm-hmm.
We're 135 degrees right into here. We're 67 from here. So we do have some cycles from low to low coming in, something worth paying attention to.
Mm-hmm.
Now, if they give out, we're probably going to test 3,900 level without any problem. Otherwise, the next thing is 4030, 4038, 4050, go back up and test this.
Yeah.
It's your pick,
Yeah.
But most of the week was this crazy looking expanding triangle that we were dealing with.
Oh boy. Yeah. That was messing people up.
For 3 days. And if you were able to handle the shorter term swings, it was okay, but if you're looking for a big move in one direction, then it definitely kind of messed things up.
Yeah.
So looking at next week, I'm basically just trying to say below this 60-degree mark, which is around 4050. The market is going to be weak. And the support is really around 3916. That's the number we had before. And you can see, that level has proven to be pretty good in the past, right? Here.
Mm-hmm.
So we have to see, are we going to, is it going to hold up again? Now, if that 3916 goes, then I think we have, instead of going by price, I would say if 3916 goes, then we could be down for much longer than a few days, weeks. And it might be a slow grind, but this is going to affect the timing. If we take this out, I think we're going to be going down, not in days, but in weeks. So there's that to watch.
Something else to support that, Barry. I have monthly support was at 39.52, and we came down and tapped it.
Yeah.
So if we take that out, I agree with you. There's going to be much more selling pressure kicking in.
Yeah. And the cycle kind of extends, and I think then we're going to probably go much longer, we could be down into April, May kind of thing.
Mm-hmm.
But we'll see. We'll take it day at a time. But, this is coming out, surviving this mess is a big deal.
Yes, indeed.
So, and that's worked out pretty well so far.
Mm-hmm.
All right, let's get into the weekly. So this is where we are. Can I say, I think we switched to the weekly chart 52 because of this half came in.
Mm-hmm.
Anyway, this 3896, basically 3900 area has been the support that I've marked out. Basis weekly, that really needs to hold any penetration of the 52 square. That would be the limit, I would say. So, it's a little tricky area. And we have to respect the uptrend. That's what I said, like next week, if we hold the low somehow and we manage to move higher, all right, fine. Maybe we got something, right?
Mm-hmm.
But if we start taking those lows out like 3916, then this becomes the next target basis weekly. So, a lot of stuff starts to crumble after that. So we're kind of, we did 45 up here. So if we do a score of 45, then this area becomes support, right? So we really can't take that out. That's an area that has to hold if this uptrend is to be believed.
Mm-hmm. That's right.
And, not to forget the big picture, man. If you look at this whole thing, look, we basically, in this block, right?
Since May of last year.
Yeah. And it could be a year very easily.
Yeah. Yep.
So a whole lot of nothing. And I don't think that's necessarily positive.
No. No.
So we'll see. We might have more in this area, maybe less, but we'll have to see how that works out. But the main thing is, boy, these boxes that we drew out, last year, the year before in 2021, I think, they worked out pretty well. That was the move, initial move, and all of this is post that. And hey, we'll have to see how it works out. But for now, it's within that range.
Mm-hmm.
And yep. This 135 low is pretty good, right? I remember talking about that.
Mm-hmm.
Yeah, not much to say, mainly because we're between these, there's a lot to talk about when the swing is kind of heading in a new direction. Like, let's say we're heading down and the last two pivots are this wide apart. Or this is heading higher and the last two pivots are very far apart. But now we're between this low and this high, and it's kind of compressing. So there isn't a whole lot to talk about till either this high gets taken out or this low gets taken out. You know what I mean?
Mm-hmm.
We're kind of stuck in there. So we have to respect that high and we have to respect that low. And the way we kind of figure out the middle is by looking at the amount of time in the counter trend and also the prices.
Right.
We'll watch that and see.
Mm-hmm.
But we did do from that low, we did do 135 low to low. So there's something going on. But for next week, 39.16, 3900 is really the support level. If it goes, we probably have not just lower, but also a lot longer on the downside in time wise. I think it's going to be extended.
Yeah, the lows this week are pretty important.
Yeah. And if 40, 50 area gets taken out, then we're back to testing the highs. Probably 41.50.
Mm-hmm.
We're dragging this out a little bit. So let's move this to 41.50 now. And there we go.
Mm-hmm.
So that's kind of the situation. You okay with all that? Anything?
Yeah. Looks good. No.
Yeah. Okay.
I think that's right. I think that the lows this week will be the thing to key off of. We hold them, but it looks pretty bullish, and 40.38 is on the upside. Is what we got to get above. But if we give way there, it opens up a lot more downside.
Right. Well, here are the bonds. Let's zoom into this. Well, some things are moving nicely, right?
Yeah, you've been on that. That's been a great trade.
Yeah, that was a good trade. So let's see. Get this into focus here. So 132 was, we were looking at resistance there. That was a call, and taking this out, the lower quarter of the square. We were looking for a test of the 270, which was this line, and we got that. Well, we got that.
Mm-hmm.
And we might pause a little, but I'll tell you, it's the same story. If we take out today's low, then I think it opens up the next quarter, which would be around 118.
Mm-hmm. So,
and it looks like we're probably going to do that. And you know why I say that? Because that could have been a false break right here.
Mm-hmm.
If they wanted to take it higher, but it didn't. No false break here. Just kind of slumped right onto the line, right?
Yeah, and this week we went right through weekly and monthly support, so it could really get some momentum going down on the downside.
Yeah, well, if that goes, then yeah, we're gonna have a little bit of problems, I think.
Mm-hmm.
Looking at the weekly bonds, not much to say. We got one more bar from last week, and we were looking at a test of this 123 area, and looks like we're heading towards that. So I have this policy of leaving good enough, well enough alone.
Yeah, it's working.
It's working. Let it be. So that's what we're looking at. Let's go to the crude chart.
The trading range from hell continues in crude.
Well, yeah. And again, this week we tested the 73.50, came right down to it.
Mm-hmm.
83 is our upper band there. And we're just happily trading within those boundaries. What I noticed was, from this low, we're going to be 90 out next week, I think. Well, on the 8th.
Yeah,
right?
couple of
weeks. And normally this kind of consolidation, when it gets close to 3 months, that's when they normally start to break it and start moving out.
Mm-hmm.
So I would expect some kind of a move in crude starting next week. Well, 90 would be exactly on the 8th, but give or take a few days. But we're getting closer now to some kind of a real move out of this. Because you can only do this for so long for something, especially something like crude.
And what the other thing to remember is the longer the congestion, the more powerful the move.
Right. For sure.
So it's building up to make a big move out of this area.
Sure has that feel to it, doesn't it?
Mm-hmm.
So yeah, and and the weekly is even well, I was gonna say it's funnier, but not that it's funny, but it's in this big block.
Yeah.
And it's great to see this every week. So where things are.
Right.
But listen, since we're trying to catch the break here, I'll tell you this. We are making higher lows here. Mm-hmm. If this week's low holds going into next week, we have 3 lows, right? We have 1, 2, 3 higher lows.
Mm-hmm.
So we'll have to watch the upper bound here. Yeah. But I think it's starting to show some colors because, with this half was not going to hold, this dashed line here, it would have given out long ago.
True.
The fact that it's just pushing it, but it's just hanging in there. It's more on a positive side. Yeah. So that's that block. Let's move on to gold. Good mover this week. And just
the correction continues
and can't say we didn't call it out. We've talked about if 1887 gives out, we're probably going to go test the halfway or 1814. And here we are. Just about tapped 1814, which was our support. And the half square is about 1800, let's say. So we're coming right into support. And I'm afraid if this 1814 goes, that would be the first sign. If 1800, just $14 away. If that takes out, then I think we have a lot lower to go. Maybe 1730 to the downside. We'll see how it plays out. That would be a hell of a pullback for gold.
Yes, it would.
Also a hell of an opportunity for those who are accumulating it. So this is how you buy when it's low, right? And the reason we don't cover this in terms of buying right now is because we'd like to have it hold and put a corner in, just like we called out the high. We scored out at the 90. That leg was pretty much done. So here comes the correction. So we'll wait for the corrections to be done before we start talking about trading to the upside. Fair enough.
Yep. I think the strong dollar's weighing on gold and other commodities right now.
No, definitely. So here's the weekly. I mean, listen, if you're trading gold, that's a lot of patience right here.
Yes, it is.
A couple, 3 years. So that's pretty good.
So
what's that?
You just buy the metal and put it in the vault, and then you're not worried about it.
Well, every time it's down here, you buy it.
Right.
In the vault, right.
Yeah.
So anyway, might be getting another chance. So we're heading straight down. Looks like we talked about the weekly. We talked about 1919 holding. If it doesn't, it's probably going to fail, and there you go. So basis weekly at least is 1767 is the next level we're watching for. And not to forget, we did call out these highs, right?
Sure.
I always forget to mention it. Hey, this came in and we called it.
All right. If you don't believe us, just go back and listen to the previous shows and you'll hear the calls.
Yeah, exactly. It's a good test. Next one would be copper. The basic trend is up. Looks like a little bit of a correction here. very, very sloppy conditions, even for bullish trend coming off these lows last July. It's moving, but boy, not what I'd call a clean trend. Not
It
like
looks to
back in
me,
2020. Like this is like a pleasure to trade, right?
yeah.
Then it just get murkier and murkier, but it's okay.
Put an ABC on that, and that's what we might be doing.
Down here.
Yeah, off that daily.
Well,
Because
we have a
that came,
possible Gartley setting up here too.
yep, that came right into my the ABC there goes right into my full square on the daily. So doing that would be just fine if it corrected that way.
That would come right down here.
And to see how it would sit on top of those previous highs in November, December.
Yeah. Well, now that we got that, might as well throw Gartley on it and see.
Yeah.
So there you go. There's the box.
Yep.
And it would help if I change the colors, but
it's a nice looking Gartley.
Gartley looks good. And here, well, I mean, if it holds in this area, that's not a bad thing altogether.
Nope. That would be a nice correction.
So I'll leave it on there for now then. See how it goes.
See how it plays out.
Yeah. Anyway, the point with copper is looks like, well, what we left off last week was, I can't remember if we talked about this half square or not.
Yeah, we
feel
did.
like I did. We need to hold above that because that was support right here. And because we talked about how it held in the past, right?
Yep.
So the fact that we took it out, we're not quite done yet. And the next support level is really around 373. And it's a little soft for now. So we'll wait it out and see. Weekly copper, we pointed out this 50% of the square. When this high came in, how the pullback, if we're really bullish, how this half square should hold. And then for a couple of weeks, we saw how it didn't. We were going back and forth, and this week was exceptional. Did a big old maybe a stop grabbing move, but ran up, reversed immediately, came back down, took out last week's high, outside reversal, sort of within this correction. Looks like we have more to go. Basis weekly, I mean, ideally, this 390 area looks good. We'll see what happens, but with the weekly all the way down to here, still uptrend. So it's bullish, but for now, we'll see how it consolidates. What happens with copper is, it'll get to the next level quickly, and then it'll just sit there, consolidate. If you notice, like here, we got up to, the value area, and then it sat there, right? Next area, sat there.
It does that a little. And that's why when the commodities go, you got to get on them, because the consolidations and corrections when they're in a bull market are just high level congestions. They don't really pull back all that much. I mean, look at that move from March of 2020 into the highs.
Exactly.
There was no real major pullbacks. It was all just
and if you try to get in, in here, unless you're really skilled, you get all chopped up. because you sat there for months, right? I mean, weeks.
Yeah.
So, over here, you're trying for weeks to get in, and you're wondering if it's going or not going. So,
Which is why when I go over nat gas, I'll show you how we try to get in as early as possible with a safety margin.
All right, moving on to the dollar. Well, we squared out at the 90, called that a low, and we got trades on, and then
beautiful
we took out the 90. And well, we said, for the uptrend to really establish itself, we'd have to take out the 90, and we did after a little bit of a struggle, and now we're on the way.
I mean, that was a beautiful call, Barry, because you were shorting the euro above 109. I mean, it was just perfect.
Yeah, that was
really good.
Well,
timing.
That's how these cycles, man, when they get traction, these cycles, they work out really well. So it's then the rest of it's just a matter of getting positioned, right? So it looks like 107.25 is really the next target. I was going to say this high over by 105, 106. Yeah, fine. The 1/3 of the square right here, 107.25 seems to be the next one. So we'll see how it goes. But there's definitely more upside left. Yeah. not much more to add to that.
Mm-hmm.
Let's look at the weekly dollar. And here's the pullback. Again, we called out this high, when we got there. We've been bullish since these lows came in.
Mm-hmm.
And we were looking for it to pull back close to the 90. We did, and the daily helped us sort of nail it down. We had this huge outside reversal, that's a big sign, giveaway, right?
Mm-hmm.
And then we had nice follow through for 4 weeks, so we're good. And basis the weekly, I think this 106.25 would be good to watch first. Although that hasn't been, got to be fair, it's been good for time, but price wise, it hasn't been exactly hitting to the tick. I mean, it did over here. So it's possible we get up to 106.75, this area. That will be the next resistance. But boy, we get on top of that, then I think we have new highs coming in.
Yep.
So it's a really critical move here. If we're going to do it straight off and pull back and settle on top of that, or if we're going to consolidate here and then take another shot. Anyway, the launch would have to come after 106, 107, this area up here above this half square is my take.
And the bottom line, the dollar looks strong.
Yeah. Well, ever since 21, right? I mean,
I mean, off of this pullback, it looks like the pullback's over, and now the next leg, is it going to be a lower high or a higher high? We don't know yet, but it's definitely on the launched on the next leg up.
Well, ultimately, it's a higher high for sure.
I agree. I agree.
It's just
what's the path?
There, right?
Yeah. What's the path to getting there?
The big questions.
All
right, moving on to the euro. Looking good.
That timing is great.
Yeah, thanks. So we're looking for weakness coming off of this high. And we said if we take out 108, then we're probably going to test the half square. We after the really technical retest of the 108, we went back and we took out the half square. Today. That's why I thought that the dollar could go a little bit higher before finding resistance. I mean, yeah, we have some in this block, this level that we used last year or earlier. Yeah, last year. This 103, I don't think that's really valid at this point. I think we're probably going to go down to the full square 102 on this run. Yeah, it might take a little bit longer. We might consolidate and whatnot, but as long as we're below 105, 105, 106, let's say 106, half square 105.7, right? I think the gravity is really pulling it towards the 102. So that's a big drop if we get it. Looks good.
Yes, it is.
Looking at the weekly, well, let's look at the big picture here.
We failed right at resistance.
Yeah. Right here, right? Easy to see. I don't know if you guys can see that, but this is what we're talking about. This block right there. Very easy to see. Well, now it's, that was a turn.
Yeah.
And, well, I'm thinking new lows at some point, but for now, let's just settle for this 103, 104 level area down here. Yeah. I think that's a reasonable target. And, given that the dollar has a lot more room to go, testing this low here, this 288 down would be the next leg, 103. Now we might, what happens after that? Well, there's two things. Either we're going to consolidate above that, we're going to take it out and just go much lower. So the key is, are we going to consolidate above it or not? Right?
Exactly.
Take a look at it when we get there. Well, that's all I got. That's the big five.
Yes, it is.
If you guys like our work, please feel free to hit the likes and subscribe, and also spread the word. Maybe share the videos on Twitter or anywhere else. And we thank you. Let me put it back to you, Ben.
Excellent.
Get it going. Thanks.
Good review.
Thanks. Well, that's a perfect pullback to the square. if this is going to hold.
Which is why when we were talking about the ES, when you were doing the review, I said the lows this week are really important.
Right. Mm-hmm.
Because everybody that's watched this show, if you're watching for the first time, these points are what we call major decision points, right? It either stays on top of it and builds to move higher, or it goes below, gets stuck under it, and then you're in another quadrant, the lower quadrant.
Right.
So having these lows hold next week is key for the bull's case.
Mm-hmm.
If we lose this level, again, all these levels are on the Google Doc spreadsheet, which we'll share the link to. So for the NQs, this is around 11,900. That's the key number for next week. Hold it, and we have, the correction could be over, and we could start moving higher.
Mm-hmm.
Lose it, and the selling's going to accelerate. Because then we're opening up. We get stuck below that full square. We're opening it up down to 11,280.
Right.
That'll be the next stop. So, we talked about the timing that came in here off of these lows. Now we've corrected, 1, 2, 3 here. Nice push down. Holding these lows or not is going to tell us of whether it's a big, strong sell-off or just some sort of high-level consolidation that we can sort of go sideways next week.
Exactly.
And going forward. So that's it. Anything else to add here on NQs?
Not really, because it kind of follows the ES talk just a little bit. So
yeah. I
more or
mean,
less.
the key is we've broken the uptrend. The correction is taking place. The severity of it will be determined by, in the ES and here in the NQs. If we hold the lows of last week, that'll limit the damage. So that's the key thing we're going to be watching next week. From the commodity standpoint, the interesting thing, as I told you in the intro, we're only going to talk about one, nat gas. All the commodities are correcting. Two of them are going sideways. Crude oil, which Barry showed you, and cotton, which we've talked about, multiple times on different shows in the past. Those two are going sideways, winding up, getting ready for a break. The two bullish ones that we talked about that had a good run this week were cocoa and coffee. They've sort of completed this first push higher and are now in correction mode. For example, coffee was 30 degrees up on the daily, 90 degrees up in time on the 4 hour. Right. So those are decent timing points. We've started pulling back. We want to watch and see how those pullbacks set up. And as they begin to set up, we'll review the chart on the weekly show like we've done in the past. But those are starting corrections. Other things like sugar and copper are in corrections, gold and silver. The grains are all correcting now. So we want to watch the charts. We're not going to talk about them on the show. We want to watch the charts, watch for setups, watch for them to sort of, make a low and then begin to put in that corner and give us a transition where we can begin to put them on the radar and start accumulating. That's exactly what's going on nat gas this week. And I want to review that one. We'll spend a little more time on that. And then Barry and I will just kind of riff for a little bit, talking about what's going on in the market. So here's nat gas. It has been a torrential downpour, if you will, since the highs at a little above 10. But look at what happened this week, right? We made this low on the half square.
Mm-hmm.
And then something different that hasn't happened since December, we saw a sharp move higher the last 3 days.
Mm-hmm.
I believe that we've put in this low here, and the reason that I think it's a corner, I'm going to drop down to the 4 hour, and we're going to go over the 4 hour, and I'll show you sort of the anatomy of how this thing unfolds.
Mm-hmm.
On the daily basis, we're just starting to come out. To really have confidence on a daily basis that we've put in a low, we need first to break this steep downtrend line, and then we need to get above this full square in the, call it 282 range.
Right.
That's daily basis. But let's drop down to the 4 hour. And the reason why I kind of sent out an alert the last couple of days on that gas, this is what I saw happening. So if you watch this downtrend, so this is kind of how we triangulate these things. We did a perfect ABC up into that point. So we know something ended there and something else was starting. Well, what was starting was this sort of cascade decline. So if you tried to catch knives coming down, you really got burned badly. When we got to 144 down, which was right around here, I started looking at this. I said, okay, let's watch the 4 hour now. And I posted it a few times on Twitter. Let's watch the 4 hour and see if we can get signs of a bottom forming. And that would be a high, a higher low, and a higher high. Never happened. Right? Watch this. We kept making lower highs. And then we would make another lower low. Like in here, we started watching it. Can we make a high and a higher low? No. Can we make a high and a higher low? No. This week, for the first time in months, we made a high, pulled back, and now we've made a higher high and a higher low. And here's where I was talking to people that we need to watch it because of what's going on in the 4 hour. We had a pullback, a very shallow pullback. And I said, if we take out this high, that'll be the first time we've done it in a long time on the 4 hour. Months. Well, we did that. We put that in and look where we ended up the week on the highs. Yeah. So this is while it's very early and it's very risky because we don't have the daily behind our back yet. Mm-hmm. This is how you look at the 4 hour and you say, okay, something's starting here. Do I have a square on my daily? Have I gone down? Do I have timing? Is there something there that I could say, okay, the odds are beginning and the evidence is beginning to stack up that we may be putting in a low. And this is what I think is happening in nat gas right now. Now, could be wrong. Next week, it could turn around and just take out these lows and push, lower low again. But by getting an entry in here, you can now put a stop right there on a 4 hour basis. So you're risking really, really small amount to potentially catch the corner here on nat gas. And I like the way it moved, the last couple of days, any weakness was bought up. And if we flip back to the daily, 3 straight days of pushing. And the last 2 days, we've closed right on the highs.
Right.
Next big test is going to be this trend line and this full square in the 282 area. We don't want to see it get stuck under that. If we get stuck under that, then we got more work to do. If we can push through and sit on top, again, another piece of evidence you can put in to say, we may have seen the low here. What the other characteristic that this gave me confidence and said, okay, here's a piece of evidence. Look at, we were for 6, 7, 8 days, we were trying to build this shelf and see if we could hold up. It pushed down, made a new low, immediately rejected it. That's the anatomy of a false break there. And the false break came on a half square. Right. So there's enough there to say it's worth a shot. If you can on a lower time frame create a good risk reward, where you have a spot where you can call it, okay, I'm wrong, get out, which I think we have on the 4 hour. This is a good spot, and I think this is the anatomy of a corner. We've been going down since August. So timing is there, 6 months, 180 degrees. So there's enough evidence for me to be interested here and to look at it on a 4 hour entry with a pullback and a higher high and a higher low there. Mm-hmm. I know this is generally too early for your taste, Barry, but what do you think about the evidence and what's stacked up here on nat gas?
Well, we're almost 135 bars down from the high, which is a nice number.
Mm-hmm.
So it's possible that we finished off a cycle here. We also have a 90 low to low, that low in October.
here.
Yeah.
Yeah.
That low to
Yeah.
the Feb low it's about 90 bars, I think.
Mm-hmm.
So we have some cycles that sort of clicked off at the low
Right.
around here. But I think my interest will be a lot more after we get up above 265. I think that's a number for me, which
Let's
is
see.
not above your square, but
Right in here. Yeah, I see right
yeah.
here. Above this little
We clear that.
shelf.
I think there is some hope. Where's your full square?
It's about 282, 283.
283. Yeah. So if once we clear that, we're in pretty good shape.
Mm-hmm.
But yeah, 265 for me. I think that's early enough where I'm comfortable.
Right. Right.
Because if you look at July of 2020, it was right about, there was a high there.
Hold on.
Once that got taken out, is we kind of consolidated and started moving higher.
Let's pull it over.
Mm-hmm.
Right in here.
2020. Yeah, I really have to pull it over.
Yeah, it's right in here.
Yeah, right there. So if you take, I'll give you the exact date. If you take the high of August 28th,
yep, right there. Right there.
If you drop a horizontal there, that's kind of the level I'd be watching. Right there. Yep.
Yep.
So if we go back, you can see how that lines up, right?
Yeah,
so it's right at the square too.
Pretty much at the square. Yeah.
Yeah.
Yep.
So basically now what we have now is kind of a zone to watch. Are we going to bounce up against that and sell off, or are we going to cut through that and settle above and ready to launch? So that's really the key.
Yeah.
And a similar pattern happened. I'll show you. The December 17th would be like the midpoint of 2021.
Right in here.
Now look at that, right? We went sideways, false break to the downside.
Yep.
Broke,
and then pushed and went.
Yeah, broke to the upside. And then the first pullback came in almost to February.
Yeah. Yeah. Right.
Then from there on, it was
higher lows, higher highs. Yeah.
But you can see that consolidation with the false break happened there also, right?
So, absolutely.
Mm-hmm.
Yeah. So we'll see. I mean, to me, it's intriguing. This is kind of how I look for, commodities to talk about on the show. Is I'll look at the daily. I'll see what kind of relationships we have there. If we're at a corner or if we're moving, and then you drop into the 4-hour and see if can you get a good setup and confirmation that momentum is beginning to come into this market.
Mm-hmm.
And that's, I think we're in the early stages of that in nat gas. As I said, I knew Barry, in talking to with Barry, I knew this would be the level he's much more comfortable, and it's a little lower, but yeah, right, because that full square gives you the confidence when you sit on top of that.
Right,
it says, okay, we're clear. This price action was deemed to be a bargain.
Mm-hmm.
Because people are stepping back in to buy just above it.
Right.
So we'll watch and we'll see.
And, somebody's got to catch the corner too. Corners work out well if you wait for the right numbers and decide. We do have a lot of cycle numbers at the low.
Right.
So it's not like, you're not guessing at it.
No. And the key thing too is you look at where's your stop, where you know the point where you're wrong, and you say, okay, can I handle that risk? Am I okay with that? And if the answer is no, you don't trade it. Right. Because you have to be disciplined about that when you're trying to catch these corners, you could be wrong, and it could push down one more time. Mm-hmm. And then even then it could push down one more time. Like there was a lot of people trying to buy all the way into here, right?
Right.
And it pushed up and then would take out the low, and it push up and it would take out the low. So you have to be willing to take those small losses, step aside, wait for the setup. Take the small losses, step aside, wait for the setup. And that's kind of how, the anatomy of how we look at, or how I look at trying to find the spot to get in here. Barry, one of the things I wanted to talk with you about, because we touched a little bit on it last week, is again the choppy markets, because we're continuing to see that. How do you discipline yourself to be patient and wait for a proper setup? Like, what do you do? What's the way in which you say, all right, no, I'm not going to jump in. I'm not going to jump in. What do you rely on that? Because if you go with emotions, emotions are going to get you into trades that you really don't want to be in, whether it's fear or greed or fear of
Mm.
missing out. So what do you do to sort of dispel those things and say, nope, I'm sticking with what? What do you stick with?
Man, I wait for until that I'm clear about my setup.
Mm-hmm.
And the setup has to be clear. Like I have rule-based entry. So, the rules have to, all the boxes have to check. And if it checks, then I get in.
Right.
Now, my thing is sometimes all the boxes check and I might not be in. Right.
Right.
That's the
Right.
other side of the coin. So it's either too early or not taking it. So, but I try to, if I'm here, I'm watching, I take the signals I see. And the reason is, this is like part two of what we started sort of last week, which is, the one way to really survive the long run is to have a systematic approach, right? You need to have a system,
Mm-hmm.
or put another way, a set of rules that get you in and out of the market, at least for the most part. So when you have a set of rules to get in, that avoids all that, trying to guess with the mind, which really can't even figure out what's going to happen tomorrow. you know
Right.
so if you wait for the mind to come to some recognition, it's I think it's just too much pressure to be trading, to be an active trader. So, and I think if you look at all the people that have been around, traded for a while, they eventually end up with some kind of a systematic approach to trading, just like, all the other things that people do. We take a samurai, they have a systematic approach. Take a war, they have a systematic approach. You know what I mean?
Mm-hmm.
Like everything
Mm-hmm.
that has a degree of uncertainty, you want to know your probabilities in the game. So when I say systematic, I'm really saying that you need to know your odds.
Right.
So if you know the odds of the system, then getting in is really not the problem, because you know the risk, you know the odds, and then you take the trade, and so many out of the 10 are going to be correct, or 20, or however many trades.
Right.
So I think that's the most sane way to do it, because anything else is just, well, it gets too mental, and then it's, then not having the morning coffee or whatever is going to affect your, right, your
Because
decision making.
one of the things we talked about was don't grade yourself. When you and I were talking about this, years ago, was don't grade yourself on the result of a trade. Grade yourself on whether or not you followed your rules or followed your system. Like, did you have the setup and did you take it? Right. That's a good trade, regardless of what the outcome is, because if you followed your system and you took the trade, even though it may have been a loss, you know that over a certain number of trades, you're going to be profitable.
Absolutely. And
And
that's,
so,
that's the whole thing.
right, it's forgetting, trying to not look at, oh, did I make money, and judge that meaning you made a successful or an unsuccessful trade, because you can take a bad trade and make money. And that's going to kill you in the long run if you don't follow a system and follow your rules, and then grade yourself on, did I follow the rules, not did I make money.
Mm-hmm.
It's hard to do because obviously the goal is to make money, but in order to do that, you have to follow the system, and you have to let the odds the edge and the odds that you've created work in your favor over a number of trades, because it's not going to work on every single trade.
When it comes to money versus trades, it's always the trades, obviously, because you don't know where the market's going to go. You don't. All you know are probabilities.
Mm-hmm.
So you have to have a systematic approach. And like when we talk about this stuff, like, hey, it's going to the square, the cycle ended, we have a 90. So, I'm kind of hoping people that are listening, they have a system. And when they hear that cycle ended here, then you can take the other side of the leg. Now we can trade the long side, that they'll be more alert and watch for those long side setups that they're going to get triggered on their systems, right?
Mm-hmm.
And it could be a very simple one. And systems can be very simple. It could be complex, but you need to have a system that you trust. meaning, if you take all of them, that you're always going to end up in the positive.
Right. You'll win enough to where you'll be positive.
Right. So that's on the defensive, right? That's like watching your risk. The other side, the part two of the game is to manage the trade so that you get into some, like we always say, get into break even trade and then just wait for things to work out.
Mm-hmm.
And you cover some as you go. So that's a whole dance, right? But in what we talk about every week is just analyzing the market and where the cycles are and where the levels are, which should support the work of people that are having systems. Even if it's a very basic system, it doesn't matter, right? As long as you know where the levels are, when the system kicks in, then you can kind of figure out the probabilities. So that's how I'm looking at it. I don't know if that.
No, that's helpful because it's, we always, I go back to the Mark Douglas stuff, right? Which is in this game, you can click a mouse and make money.
Mm-hmm.
And it's dangerous because of that. Because you could be getting in without, a good setup or without rules. And if you do that, eventually you're going to blow up.
Right.
And it's following the rules and then, grading yourself on how well you have followed the rules. How many times did you follow the rules when you saw the setup? Because remember, it's when we talk about it, it's not, the markets aren't live. When you're live, emotions are there. No matter how seasoned of a trader you are, you have to fight those emotions.
Mm-hmm.
And sometimes the hardest trades to take end up being the best ones.
Well,
Right?
the thing is that hardness, how hard it is to trade, goes away over time once you start following your system and you start trusting the system and you're trusting yourself to take those trades when they present themselves.
That's correct.
Right? Then you become consistent. So if you're not consistent, man, that's like the worst thing. And that's what sort of riles up the emotions because at some level that you're not consistent, which means you can't really trust yourself in the heat of battle, right?
Which is why you have to develop your own system, even if it's just a derivative of someone else's system, because you have to be comfortable with it. You have to believe in it. You have to be comfortable in it to trade it. Or else you're going to see a setup and you're going to go, it doesn't kind of look right. I see this news is coming out. The market's going to, not like it. I'm not going to take the trade. And that's the kind of mental games that come up if you don't believe, you don't own the system and don't believe in it. Those are the kind of conversations you're going to have with yourself that are going to throw you off.
Right. And then people jump onto the other side where it's all automated, which
right.
I don't know. Good luck over the long term. The best I've found is to, or at least not just for myself, but people I've watched or known over time, is to do your analysis, take the time, but you lean on your system to take the trade analysis, and knowing where the levels are can help to with the targeting, where the target should be, like for options, for example, right?
Mm-hmm.
Like the expanding triangle this week, that you could, if you knew where the levels were, you just picked your strikes at those levels, and you traded, short term, you were fine.
Right.
So you have to kind of know the levels and have a system to get you in and out, and you can have a couple of, if you can handle it, you can have 2-3 different rules.
Like day trading versus swing trading, that type of stuff.
Yeah, and consolidations versus trending or whatever. But even if you have 5 systems, that's better than trying to go with just mentally trying to figure it out on the fly,
mm-hmm.
which is the worst.
Right.
And you might hit here and there random, so you get randomly rewarded, but then over the long haul, you end up paying a price, either with the account or your health. So, or both. So
yeah, that's usually what happens. Both.
Mm-hmm. So I think, I'm a big believer in having some kind of a systematic approach, so that it can help you be consistent in taking the trades that show up, right?
Sure. And that's the key, right? You want to take all the setups, because we never know which one trade is going to be the big trade.
That's right.
So you
I mean,
have to
look
you
at
have
this
to take them
nat
all.
gas, which
Yeah.
cell would have worked out, right?
Right. Right.
Luckily, on the downside, on this last leg, there was only two shots you can take, and
Right.
they both worked out to some degree.
Right.
So that's why you want to watch the bigger time frames when they turn. And let's say you just want to take trades to the long side, like take that 2022, right? So we got that low come in. We had that December consolidation, putting everybody to sleep. They were looking for some big rally in December, didn't didn't show up.
Right.
And then slowly it broke out, you know. And once you knew it got above the level, your square, then to take the long side trades are going to have a much higher probability of working out than short side.
Exactly.
So that's what I mean by that. You can kind of have a little bit of control if you want to, call those out. You would just lean towards long side trades than short side. And here it paid off in, aces.
Yep. Huge
So,
move.
and while it's consolidating, you just wait back, and no system should trigger buys or sells during a consolidation. So that's the first thing. But if you sort of follow through with the levels, then it'll help you stay on the right side and take the trade in the right direction, I guess is what I'm trying to say.
Sure. So where are you focused this week? Which markets are foremost on your mind?
Well, bonds, dollar, crude to see, if we're going to break out towards the end of next week.
Yeah, that 90 is big. So I agree. We really got to watch crude.
Yeah. I mean, you only get 4 a year, more or less in these markets. So when you get one that's getting close, it's definitely worth, like all this time in the crude, we weren't paying attention. We're like, well, here's the boundary, it's going to be chopping here. Well, now, yeah, it's still in the boundary, but now it's getting close to, timing's starting to click up. So
and it's just and it almost always takes off after it lulls everybody to sleep too. It's unbelievable how that works.
Absolutely. So and about 3 months is pretty much what it takes to lull everybody to sleep.
Yeah, true. Oh, that's not doing anything.
Yeah,
it's just in a range.
They kind of go in those 3-month, 90-day blocks. So anyway, so I'm watching crude and also gold, but not so important right now, because it probably has a little bit lower to go.
Sure.
But those are the key markets. And of course, some of the commodities we got to watch, no question. Excellent. Including nat gas.
Yes, 100%. Because as you can see, when this thing goes, it goes. So we're watching it, and we're hopeful for volatility. That's what we pray for. Give us volatility, because with volatility, we can trade. So anyway, great show, Barry. Thanks for your review as always. And everybody have a great week, and we'll talk to you next week.
All right. Good job, Ben. Thanks.
All right.
Talk later. Bye-bye.
Bye-bye.